What's up, guys? Today is the start of something new, something great, something legendary, I hope so, and that is the first episode of the WTF report. Now, don't worry, I'm still child-friendly here. I'm not throwing any profanities. This is only for educational purposes. That is my intent with this channel, is to make everyone smarter and more informed. The WTF report stands for the What is Trending in Finance report. What this report's going to provide is it's going to give a high-level detail of everything that happened in the market the week prior. I'm going to be touching up on some overall economic news and data and statistics. I'm going to be touching up on some industry news, and in some cases I'm even going to dive into some stock-specific news and how all of this information either impacts a certain stock, industry, or the overall market. So without further ado, this is Ayan with AQ Markets. Let's get ready for the first episode of the WTF report. So this was a pretty wacky week. We had some pretty bad data come out, and we had a pretty interesting Thursday morning. And on top of that, we also had a very famous CEO say some pretty crazy stuff. Drop a comment if you can guess who it is before I let you know. So let's get started with the overall economy. The S&P 500 was down 1.42% week over week, and the Dow Jones was down 1.66% week over week. We actually hit a really bad rut in the middle of the week and Thursday morning. We were down between 4 and 5% between those two indexes, and then it slowly started rising back up. Today we ended up a little flat, so we managed to recover some of that initial loss that we saw. The causes of this come from the words that Jerome Powell, the chairman of the Federal Reserve, said, and additionally the joblessness reports that came out. So let's start off with the joblessness reports. We hit 36 million people unemployed. That is pretty absurd. Just the population of the United States is 330 million, and that's not even just the working class people. That's kids and babies and everything. So we are at a really unstable level of unemployment, and we're kind of uncertain of what's going on. Jerome Powell said Tuesday morning that the economic recovery is not going to be a V-shape. So let's get into what that means. Typically when there's like a bit of a recession or a depression in an economy, obviously the charts show the stock market fluctuating, but trending upwards over time. A V-shape just means that it's going to drop and then it's immediately just going to pop back up in a fairly quick amount of time. The four common shapes is the V-shape, as I explained. There's the U-shape where it drops down and then it has a slow gradual recovery. There's a W-shape where it goes down, it goes back up, goes back down, and then it goes back up, obviously forming a W. And then there's the dreaded L shape, which no one wants to see, where it just goes down and then it flatlines. It does not recover. We've seen certain countries go through that, and honestly, we're the United States, it's most likely not going to happen. But Jerome Powell kind of shut down any ideas of us having a V-shaped recovery, so it's looking like it's going to be more shaped like a U. He also said that with the Federal Reserve rates being 0%, he does not plan to hit negative territory. Certain macroeconomic economists are still maybe potentially pricing that in and expecting it, but if it's coming from Jerome Powell, it's safe to say that we might not see negative interest rates, so that's not something to worry about. Moving on to some industry-related news, the CEO of Boeing said a very ominous message this week, and it's kind of confusing, and it's very just unspecific, and when people are given unspecific news, they just kind of panic. He said that there is going to be a major bankruptcy in one of the airlines. He didn't say who.
Hated that threat. You know why? Because he'd always say somebody. He'd never tell you it was you.
So the problem with that is everyone reacts to every single airline. So airlines had an extremely bad week. Just as an example, the Jets ETF was down over 8% this week, which is really bad because they kind of reached the bottom in the middle of March, but turns out they hit a new bottom. They did recover a little bit of their losses on Thursday morning throughout Friday, but they still had an overall bad week. Additionally, with the airlines, people, specifically the analysts that cover airlines, were saying that this kind of recovery with them is going to take maybe around 5 years. And again, honestly, no one really knows the future. I'm not discrediting anyone or saying that they don't know what they're talking about, but there's just so much uncertainty there that no one could really properly time this. There was actually a photo released earlier this week of a United Airlines flight that was packed. It was filled. They even had the middle seats, even though they claimed that they weren't using the middle seats. So it really just comes down to how willing people are to fly. Are you willing to go get on an airplane and wear a face mask, comply, and then if someone coughs, are you going to be afraid and just not get on the plane? I don't know, but everyone's different, so the return of the airlines is going to be a very speculative thing. At the end of the day, I think in the long term that it is going to come back because people need to fly no matter what. But, there could be a massive demand shift that could cause airline prices to also go up. So maybe some people won't be able to afford to fly from now on and might think twice before they book a flight somewhere. In another industry, specifically in the oil and energy space, the government actually discussed giving them a form of a bailout, but in this case, they're going to be giving them tax credits that are going to be utilized for next year. And what that means basically is, obviously, whenever a company makes profits, they have to pay tax on that. But if they're issued tax credits, then they won't have to be paying taxes on the profit that they generate. A lot of people, especially Democrats in the House and Congress, they're not really for that. Typically, a lot of people don't like to see big corporations bailed out, especially ones that contribute to, damages to the environment. So there's a lot of speculation on whether that's going to go through or not, because ultimately it needs to get passed through the House and through the Senate and through everything. So I'm going to monitor that and see how that goes. This could pose a really decent recovery for energy, especially now that oil prices are coming back up. And the oil prices are coming back up because there's been a large shift in cuts. A lot of people and a lot of industries and oil producers have cut production to some pretty big lows, which is allowing the price to come back up, and demand is slowly picking back up again. So oil is on the rise, not as crazy as you would expect, but it's a slow, gradual process. Once the economy fully reopens, then we're going to see oil come back to its normal target rate that it's been in the last few years. Onwards to some stock-specific news. So as I mentioned before, we had a pretty wacky CEO moment. As we know, a lot of states have been on lockdown, and that bothers a lot of people because if you're the manager of a big, massive company, then you're losing money. So who is one of the biggest profit houses of this generation? That's right, guys, Elon Musk. So he tweeted saying basically, I'm going to open up the California plant. You can't stop me. And if you want to stop me, don't arrest my workers, arrest me. And that was just straight up tweeted. So it's pretty interesting for a CEO to just do that. And I mean, if you ask me, it's not really cool because you're putting your own employees at risk while you're not really going to be on the plant being exposed to thousands of people. But hey, that's just my opinion. And then funny enough, Donald Trump actually tweeted showing his agreement in this tweet above. So it's been a pretty wacky week for Tesla. Their stock has always historically been volatile, but now California did end up opening up, so they just kind of opened up prematurely. But it is what it is. Elon Musk, you can't stop the guy. Moving on into the food delivery services, specifically Uber Eats, they put in a discussion. I'm not going to call it an offer, but they put in a discussion to potentially acquire Grubhub. And this forms an issue because of antitrust laws. What antitrust laws are is that when you have only a few companies operating in a certain specific niche, for example, food delivery, it poses an issue when there's so few of them because they control the pricing. So antitrust laws exist to protect the consumer from them just consistently hiking the prices over time and then making it difficult, because if no one has an option, they're going to have to pay the price. So we look at the four main players here. We have Uber Eats, we have Grubhub, Seamless, and Postmates. If Uber Eats were to actually end up buying Grubhub, they would be taking up 48% of the market space of all food deliveries, which is just way too much, because over time, what they could do is they could just keep cutting their prices, bleed out Postmates, bleed out Seamless, and then just become the number one or only food delivery service. So I don't think this will be allowed to go through, but we're going to see what's going on. But Grubhub ended up popping up in value this week, as you can see from their chart. So we'll see. Typically, when there's merger talk, a lot of these companies will kind of pop off, and then when the deal actually doesn't go through, they drop down. So a lot of people take some bets when it comes to these kind of stocks because they could either make a lot of money, but remember, high risk, high reward, or you can also lose a lot of money. So be very cautious if you're looking at Grubhub right now. It's very risky. Twitter did something pretty bizarre as well. As you know, we're all working from home. Well, most of us are. And it's kind of creating a whole paradigm shift. And Twitter is going to be the leaders of that paradigm shift. The CEO tweeted out saying, you know what, you guys can just work from home forever. Some of us have just been extended to June, July, August, whenever. But he literally just said, you guys can work from home whenever you want, as long as you want, essentially forever. This is going to cause a major shift because if all of these companies are going to start following suit with that, no one's going to be paying rent to these commercial buildings. The demand for commercial real estate is going to go down. And I'm not going to say it's going to cause a potential problem for commercial real estate, but this is definitely going to cause prices to go down. And this could potentially also lead to a lot of co-op workspaces like WeWork, for example, to rise in demand, because if these companies are realizing, okay, we don't need to house 1,000 employees every single day. Everyone can work from home. We might just need a conference room or something every now and then. Let's just get a small shared space. That could lead a whole paradigm shift where this could be the new thing. And that might rescue commercial real estate. But at the end of the day, it's a very interesting, different situation that we haven't seen before. So I think going into 2021 and seeing how companies are going to react to this whole work from home paradigm is going to be a very cool thing to follow, because investing in technologies and investing in companies that allow this work from home lifestyle is going to be the major winners in 2021 if this is the new paradigm shift. Finally, we had a really funny 1-2 switcheroo, and that had a lot to do with Amazon. So someone found out that Amazon was interested in purchasing AMC. First thing that comes to mind when you think AMCs, you're thinking the movie theaters, right? So that's what Wall Street thought. Everyone thought that, okay, Amazon's going to buy AMC Entertainment, the movie theaters. So their stock kind of jumped up pretty wildly Monday morning. And then we found out that, oh man, it was the wrong AMC. They were actually talking about AMC Networks. Okay, so if you look by this chart, they popped off on Monday and then they slowly just went back down. And this is just a common case of misinformation and just being a little too excited. A lot of times the stock market is driven by news, and as you see with Grubhub as well, as I showed before, when there's talks of mergers, these stocks just pop off, and then when the merger doesn't happen, they drop down. So this is a complete perfect example of that. It's AMC Entertainment. Meanwhile, AMC Networks they're up. They're around like 12 to 15% this week, which is a good sign for them. But again, if this doesn't happen, then who knows what's going to happen to this stock. That concludes my first WTF report. I hope you really enjoyed this. I hope there was a lot to take out of it. I hope it answered some questions on what was going on in the markets, why things were volatile, and why certain companies were jumping up in value. Drop a comment if this is something you really enjoyed. If there's any other information that you're curious about that happened this week, also drop a comment, and I'd love to talk about it more with you and hopefully answer your questions. As always, please like, please comment, please subscribe, show a friend. Stay tuned for next week when I do the next WTF report. And thank you for all your support. I'll see you next time.